Know the difference with Annex Wealth Management? Keith Butler, a wealth manager at Annex Wealth Management. Hey, Keith, welcome back.
Great to be here, Danny.
The gig economy, the side hustle, the part-time extra job, all ways people use time and talent to earn extra money. With extra income comes a responsibility to report to the IRS. Yeah, you can get paid in cash, but for the purpose of this segment, we're going to consider wages you report on your income tax. And you might be asking, do I need an LLC? Keith, the first category we'll talk about for tax purposes is a sole proprietor. Does that cover most of side hustles?
Oh, I'm sure it does, yes. It'd be a bit unusual, I would think, for people to enter into sort of a partnership, for lack of a better word, after their retirement in order to get things done, because that would be a kind of more of a full-time gig, I would almost think.
Okay. So the Keith Butler lawn mowing company, you would be the sole proprietor, right?
Yes, you would, indeed,
okay.
Yes.
I've read that unless your side work produces $30,000 to $40,000 in annual income, there's no benefits to move past sole proprietor. Is that right?
I would say no. And the reason you would move past sole proprietor to form an entity in order to run your business would be to protect liability. And that would be really the nature of the business itself and whether it lends itself to potential liability rather than any sort of income.
Next up is the LLC. That's the Limited Liability Company. I hear LLC all the time. What exactly is that?
That is an entity. It wasn't a thing until a couple of decades ago, and then it became very, very popular because it has fewer formalities than a corporation does, and it protects from liability. It falls into two categories as far as how you think about it. One is a single-member LLC, and one is with multiple members. Now, it can be done for a business, and what you're contemplating here when we're talking about side hustles is kind of a business. The other way that LLCs could be used are for what we call passive investments, like if you bought a four-family or a commercial building, just real estate renting out, passive investment. We're talking now about an actual company where you're providing services or goods in exchange for fees. My opinion, and this may not be held by everyone, but my opinion is that for a business that has more than one person, you're better off with a corporation than an LLC. Why is that? Because the corporate law has great structure. You have shareholders who are owners. They elect a body called a board of directors that oversees the big picture and elects officers, and then it has officers that run day to day. And if you look at the LLC law, it is managed by either a manager or its members. But what do LLCs do? They elect board of directors. I see this all the time. They elect board of directors. They have a president. That's not a thing in LLC law, but they do it anyway because it makes sense, and that's what corporations are.
Okay, you're talking about an LLC as being something much larger, I guess, than I pictured. Are any LLCs just for one and two person shops?
Absolutely, and that's why I said going back to the single member, if you have your little side gig in retirement with just one person, then go ahead. And an LLC would be just fine because it'll accomplish the goal of protecting you from liability without needing all the formalities of a corporation. So for one person, I think it is very handy. One thing to always keep in mind, if you're doing this as a business and you do it as an LLC, to protect yourself from liability, you have to respect all the formalities of an LLC. Meaning that your billing, if you send an invoice, have it in the name of the LLC. Open up a bank account in the name of the LLC so that everyone knows they're dealing with an LLC and an entity and not you personally.
The L and the L, limited liability, what kind of protection does it offer for the individual?
Well, it would be anything that would relate to the business itself, unless where it could be pierced. We call it piercing the veil, would be, number one, if you didn't respect the formalities and someone thought, hey, I had no idea I was dealing with Clayton lawn mowing. I thought I was dealing with Danny.
Right.
And then they would sue you personally. The other would be if you took a negligent act as an individual, you would be held liable for that.
Beyond the LLC, there are things, S Corps, right. C corporations. Is that part of a discussion for anybody, and at what point?
Yeah, well, again, I think it would be if you had more than one person and you're operating a business. I don't know that that's the side gig that we're talking about now, but really an S Corp and a C Corp, they're the same sort of entity. They have the same rules, the same operating structure, all is the same, but a S Corporation has filed an election with the IRS to be taxed as a flow-through entity.
Somebody thinks they might need to look into an LLC. Who do they talk to?
Their lawyer. Yeah, I would do that. And if you're thinking about how to have it taxed, that way you would talk to your accountant. If you had multiple people, should it be a corporation, should it be an S Corp, should it be a C Corp? That would be a conversation to have with your accountant, I think.
So originally when I was thinking of this topic, I kind of picked you because I do like your style. And then you said, oh, I've done a lot of this because you are an attorney as well.
Right. Back in my previous iteration of my career, I did these all the time.
So you're a wealth manager with a slight bend toward the legal, I would think.
Yes.
Right. Annex Wealth Management has clients who fall into every one of these categories, and we work with our clients on various business ventures because this is a very large and a very important part of their financial plan. Keith Butler, Wealth Manager at Annex Wealth Management, thank you for joining us.
Oh, pleasure, Dan.